with inflation being the way that it is,
Yeah.
I guess post-COVID as well, we're in this recovery phase.
Yeah.
I think there's no doubt that the interest rate increases will be sooner.
Yeah.
Lock in some certainty around part of your debt.
Correct. Yeah.
I think that's very helpful because
Yeah.
even if there are interest rate increases, there's at least part of my debt which is shielded from that.
Today we have a special guest, Ray Ong, a certified financial planner, to give us a rundown of what a financial planner do and how he can help you to reach your financial objectives. So welcome, Ray. Thank you so much for joining us.
Thanks for having me, Leo.
Can you tell us a little bit more about yourself?
Yeah, sure. So as you mentioned, I'm a financial planner. I studied it in university. I run a business called Fortitude Wealth Partners. I've been in financial planning since 2005.
Yeah.
Married, 3 young kids, so that's pretty much me.
Excellent. So can you tell me a little bit more of what does financial planning what financial planner does?
Yeah, look, I mean, obviously there's a lot that we do at a detailed level, but broadly, we basically help people with where they are right now in their circumstances. So sometimes they might have challenges or problems or issues to overcome. We help them work out where they want to be in the future. And that's really interesting because most people don't really think about that in detail, the future and you know what they're heading towards. And then once we know those things, then we basically come up with a plan to help them move closer towards where they want to be in the future. So that would involve super, you know, insurances, investments, debt, you know, a whole gamut of finances.
Yes, so there's a lot of happening in the world at the moment. I mean, I just want to get some of your thought, you know, what to invest or where to invest in 2022 at the moment.
Yeah, look, that's a really interesting question. And I think a good starting point, because, you know, many who I speak to will have that same approach. I think what's more important first is actually to work out for the individual, what is it that they're actually working towards? Because we can talk about investments and stocks and properties and whatnot, but what's most important is, well, what are they trying to achieve? Because if we don't know what they're trying to achieve, then it's going to be hard to find an investment that's appropriate for them. So as an example, do they need an investment that gives income? Because if you're a retiree, you need income. So you need to know that first, because from there, then you can start to think about, okay, what investments are suitable for a retiree? If you're accumulating, so maybe you've got a young family, you're starting to have a bit more surplus cash flow, you know, maybe more income in the family, and you don't need income, but it's more around that capital growth piece, actually trying to grow wealth. Then you can start to find investments and fit it in line with what they're trying to achieve. So I think first and foremost, it's knowing what it is that's important to them, what they're working towards, and then we can start to think about, all right, what are the different areas to invest in. You know, there's obviously a lot of areas you can invest in, and every market, you know, whether it be the property market, share market, you know, bond market, all comes with its own set of challenges and current issues
and risks
of the day. That's right. So it's hard to pinpoint one where there's, you know, bright opportunities, but I think this is where it makes sense to diversify, spread the eggs across a number of baskets.
So I guess it's important to know, like, your reason or your why. You know,
yes, that's right. And rather than just target one area, it will be somewhat wise to consider having a spread of different areas. And each investment should serve its own purpose within your own portfolio. So some things will be for the long term. Some things may be more for the, you know, next 5 years or so. Some things may be very, very short term. It's all about, you know, knowing what you're working towards and then matching investments with those things.
Interesting. So obviously we help a lot of clients buying houses. And at the moment, one of the hottest topic is interest rate, right? So what are your thoughts about the interest rate at the moment? Because we've been hearing a lot from the news that it's going to go up soon. And what are your thoughts on that?
Well, look, I think there's no doubt that the next direction is upwards. The Reserve Bank have been speaking about this for quite some time.
Yeah.
Initially they were talking about 2024
Yeah.
before they'll start raising interest rates.
Yeah.
But with inflation being the way that it is,
Yeah.
I guess post-COVID as well, we're in this recovery phase.
Yeah.
I think there's no doubt that the interest rate cycle and the increases will be sooner
Yeah.
rather than later, maybe
Yeah.
in the next 6 months or so. I think that's the expectation. And
Okay, wow.
you would probably know this more than me, but
Yeah.
obviously lenders can move ahead of the Reserve Bank as well.
Absolutely, yeah.
So it
Correct,
doesn't
yeah.
necessarily have to be the Reserve Bank moving. The lenders can move ahead and increase. So I think in terms of what people can consider, first of all, is getting ahead. If they can get ahead on payments,
Yeah.
make additional payments, or if they've got a structure with an offset account, top up that offset account. Just have some reserve in there,
Yeah.
because when the interest rates eventually rise, it may put people in a position where repayments have to rise.
Yeah.
So then hopefully they've got enough of a buffer,
Yeah.
to be able to manage those
Yeah.
increases. And that obviously helps with reducing interest anyway.
Yeah.
The other big thing would be chat to someone like yourself.
Absolutely, yeah, definitely.
Review your loans, your finances, and if there's better interest rates out there, or it's time to restructure the whole fixed versus variable dynamic. I think it's an important time to be doing so.
Yeah.
Because if you can, say for example on the fixed piece, you can lock in some certainty around part of your debt.
Correct, yeah.
I think that's very helpful, because
Yeah.
even if there are interest rate increases, there's at least part of my debt which is shielded
Yeah.
from that.
To give them a bit of a certainty. as
Yeah,
well,
yeah,
in their
most
repayments.
definitely. And everyone's circumstances, which you talk to them about this,
Yeah.
everyone's circumstances are different.
Absolutely,
So they'll have different capacities to repay, and this is where you want to structure it
Yeah.
appropriately.
Yeah.
Yeah.
Cool. No worries. Well, thank you so much for your time today. That was some really good information today,
No
Ray.
problem.
And so, if any of these guys wanted to hit you up, where would be the best way to contact you?
Yeah, just the website, www.fortitudewealth.com.au. We've got, I've got an Instagram, Freedom for All, official. I've got a podcast, got various bits and
Excellent,
pieces.
yeah.
So just do a search on Google, and I'm sure you'll find various things there.
Yeah, I've listened to the first episode. That was really interesting, guys. And yeah, thank you so much for listening, and hopefully I will see you guys next time.